Pedro, welcome back. How long has it been? When I
Oh
was on
man,
F.A.C.E. Huh?
I think a decade maybe, probably.
No, not that long, but I think it could have been, 6 years,
Yeah,
something like
that
that.
sounds about
So,
right.
because it was FX Street, and you're with the Wall Street Journal at the time.
Okay, so yeah, maybe yeah, close to 8 years, 8 9 years.
Yeah, yeah. So I'm glad we're both still here, and
Yeah.
we do, and all that wisdom we've acquired in the last 8 years. I've gone through your Twitter feed. I know you focus on the Fed, so these markets are unprecedented. You've seen them. You've been, watching markets, reporting on markets for quite some time. Does this feel completely unprecedented to you? What's happening geopolitically at the same time? What's happening central bank wise? Like just the cocktail of both of them.
It definitely does. It felt like that on the monetary policy side before we even got into the war situation, and now
Yeah.
that takes the uncertainty lever to a whole nother level of bounciness, if you will. And on the monetary policy side, I would just highlight, even just listening to Chair Powell's testimony yesterday, the range of kind of options that he offered, all the way from being potentially more cautious and proceeding carefully, as he put it, because of Ukraine, all the way to potentially having to hike more aggressively if needed. So if you're talking about everything between a pause and a series of 50 bip hikes or more, the range of outcomes is so great that it's really, and the notion that this conflict is going to get resolved in a matter of days and weeks seems fanciful to me, but that's not my current area of focus or expertise.
Yeah, it's not your bailiwick. So with this going on, are you in the camp that he'll go just a quarter because he wants to be moderate about this, or will he have more? Would he have more credibility, especially with what's happening with energy prices during this and grain prices because of what's happening there? If he raised rates a half, do you think the market could handle it?
I don't know if the market could handle it, and I don't think he's inclined to do it. I mean, he came out very clearly and said he's in favor of 25 basis points. I think, to be honest, this the way that markets have behaved in response to the war, kind of pricing out some of the initial front loading of tightening, has been helpful to the Fed, because the market had gotten so hawkish that the Fed had lost the ability to surprise, right? We got to if 50 basis points is being fully priced in, then what can the Fed do to hawkishly surprise? So this buys them time to be, proceed carefully and cautiously and not add to the uncertainty, is I think the way he put it. So I think he's gonna, the propensity is to go a little bit more slowly because of Ukraine, even though the immediate hit is to energy. I still think they think about the energy hit as the kind of tax on consumers issue, rather than something that's going to be long run inflationary.
Okay, and a friend of mine, a trader friend of mine, said that he thought he heard Powell when he was asked a question about the dollar being the reserve currency, that he actually said it would be okay to have other currencies be part of a reserve currency. Did you hear that?
I didn't. No, I don't. I didn't. And I think if he had said that in such clear terms, the market would have reacted more abruptly. In fact, I can recall a day very clearly when I was at the Council on Foreign Relations covering Tim Geithner when he was Treasury Secretary. And Tim Geithner did say exactly that. Basically, there was some Chinese economist who had a proposal for having a sort of SDR basket of, SDR-like basket of currencies as a reserve. And Geithner's exact comment, I recall because I was there, was, I haven't read the proposal, but said economist is very intelligent, and I wouldn't dismiss anything he has to say lightly. And the market just, I think, the dollar just tanked about 2%. The DXY tanked 2% in a matter of seconds, to the point where the moderator, whose name escapes me now, but was an advisor to John Kerry during his presidential bid, came back, a few minutes into it and said, "Hey, Tim, do you want to correct the statement that you made earlier?" And the market came right back. So again, if Powell had said anything if he wanted to telegraph something to, that serious, I think he would have been more explicit about it.
Who's trading the ruble right now? Is their central bank frozen? There's still trading going on. My associates here say, it's not a real market. You can't get in. There's huge carry. The spreads are 20%. Do you know what's going on with this since we supposedly put their central bank on ice?
I can't say I do, to be honest.
Okay. All right.
I found it. I saw a really interesting piece in the journal about what the freezing means for like how we think about reserves conceptually, because we think of them as money, but if they can be frozen because of certain things, and that changes the calculus, and it could be potentially used as a retaliatory tool.
Right.
And I thought it was really interesting to think about, but no, I don't know as far as the ruble specifically.
Yeah, that's part of the crypto argument for a hedge against the banking system.
That's true. Yeah.
Okay. So looking at this jobs report, were you surprised we got a little better number?
Not particularly, because, this was the kind of reopening time, Omicron, the US is very, is booming right now. So at least it has been. And so I think it puts the Fed in a weird spot, because the Fed is getting to the point where they think the unemployment, the job market is getting too hot, but because they have an employment mandate, they can't explicitly state that. And so they have to kind of push against it. And of course, tightening monetary policy, you're doing it in order to dampen activity, which means dampening job growth. But again, they can't explicitly say that, but they will, it's pretty obvious that 500,000 jobs a month is not a sort of a sustainable long run level, especially not when you have 7.5% inflation. So as far as the 50 question, I would say a lot of it hinges. I don't think they're likely to go 50 this time, but as far as moving 50 in the future, if you see the CPI either stay near these levels or go higher, I think they are going to.
We have a number before the Fed meeting.
We do.
Yeah. Okay.
So,
what if we have an 8 handle?
That's what I was thinking. That would really put me on the fence about but they would have that the problem is, and that came up in a conference a few days ago, they have no way of communicating the shift because they're in blackout. So maybe if they were back in the day and they could have kind of delivered something to Greg up at the Journal or Dave Wessel, but it's not like that anymore. And Powell doesn't have any speaking engagement. So it'd be very hard to prepare the market for something that aggressive at this point. And I still think they can use the war as cover for, there's enough uncertainty out there that we don't know. Again, this jobs report and the CPI number both precede the war. So,
Pedro, I'd like to get your take on, I understand a lot of people retired and they didn't want to go back to service jobs, but how did we get to, during COVID, all the support, not just for people, but companies, but people for, because they had to, couldn't go into the office, and it supported them through, a year and a half, 2 years of the crisis. And there were going to be 50 million people out on the streets because of evictions, to end up with a labor shortage 2 years later.
Well, it's pretty incredible, especially when
it's like the Twilight Zone to me.
It is, but to be honest, it was a huge success of economic policy, you could argue, right? Like the combination, monetary and fiscal policy reacted in concert, unlike the reaction to the Great Recession, which was very slow and kind of erratic, and did not include a fiscal element. In fact, it included fiscal austerity. The pandemic itself generated the kind of solidarity that led to, to the notion that everybody needs to be helped out in this situation. And so we had huge support. The downside of that is that you're having inflation, and of course the supply chain issues came as a surprise to many. And so, that's, I think it might have been a poor choice of words, but Fed Chair Powell said it was sort of a luxurious problem to have, or a good problem to have, in the sense that it's better to have an inflation problem that they need to tamp down than to have mass unemployment. But again, swings are such that they may yet have to generate a recession in order to tamp down this inflation.
Isn't that the only way? And how effective is that going to be? I mean, the Fed can't print wheat, and you're really not going to have much impact on demand destruction in agricultural commodities, which are a big part of this. People aren't going to go on a diet or have like a China clean plate policy, where they get smaller portions. So how effective can raising rates in this environment of it being more like supply problems?
That's a great point.
Not just demand.
Yeah, and that's going to be part of the discussion. I think the dovish case within the Fed is going to be that, look, it's not something we can affect, and B, it's something we should specifically look through because it's going to go away, even though it's lasting longer than we thought. And that's kind of been the dovish case. In fact, I would argue that there's people within the Fed who, even though they dropped the word transitory, they're still making the transitory case, basically, because they're saying that, even though these supply chain issues are lasting longer than we expected, they are eventually going to go away and we shouldn't overreact to them. But at the same time, if you keep getting these high inflation readings and expectations start to get out of hand, and you start to get this embedded expectation of higher prices, which you do see in terms of consumer complaints and business surveys, they have to react. So, and they're starting to have a credibility problem.
And talking about the U.S. economy, as you said, is on fire. Is it true, I've heard from a few people, that every time the price of crude doubles, there's a very high likelihood of a recession 6-12 months down the line?
That seems about right. I don't know about that particular rule of thumb.
Okay.
But Powell threw a different one yesterday, which is that for every $10 increase in the barrel of oil, you get a 0.2 percentage point rise in inflation, and you get a 0.1 percentage point hit to growth. So that's kind of how he thinks about it. A little bit higher on the inflation side, a little bit smaller on the growth side.
Okay. So is it possible that, how's he going to manage a soft landing in this environment? It looks so
I can't believe he actually used those words yesterday. He's like,
can't
engineer a soft landing. And I think the record shows that it's, we've done it more frequently than people give us credit for. And, you look back at history and there really aren't that many cases. Some people point to like 1994 in the sense that like the bond market crashed, but the economy ended up okay. And there was a boom after that. But especially at this point with markets kind of primed for perfection the way they have been for, months, if not years, it just seems really, really like a tough thing to engineer.
So I put up your new place that you're, writing and reporting on here. Where would people find do you have a column, or are you just putting out news in these?
So we just put out news. I would point to two things. If you go to the policy tab right there on the upper left.
Okay.
Anything that has policy exclusives Fed, that's my bailiwick, basically, if you scroll down there.
Right here?
Yeah. So basically that's our work.
And nice.
It's a hard paywall, but the content I think would be of interest to folks.
Yeah. Well, you have fans here, Pedro.
And I'm happy to share some of the stories, with you guys.
Yeah, and you have fans here.
Other thing I wanted to plug is that we're launching our own little podcast soon called Fed Speak, focused, looking at world affairs, but from a Federal Reserve lens. So, and it's gonna, if you go back to the homepage, there's a little. Just scroll back to where you were before. Yeah. See on the lower right there's today's podcast, and we have a market podcast from our from our sort of market technician. He does a daily roundup, but that's where our podcast is going to be. So excited about new content.
So he'll be you'll be interviewing him, or he'll be interviewing you?
No, I actually, what's going to happen is we have a Fed expert who's like a fixed income expert internally on the market side. Me and him are going to be sort of riffing off one another. He's going to be giving the market perspective, I the policy perspective, and we're going to be having guests on. So maybe we'll have you on one day. And
oh well,
favor.
okay. I go both ways on a mic.
Perfect.
So Pedro, looking at how would you wrap up the week, and what are you telling people as far as this environment to be cautious? Isn't it sometimes the right thing to do nothing and just be a spectator instead of a speculator in markets like this?
I think that's a good point. I mean, it's so hard to read anything in the markets. The way that, looking at Fed pricing alone, the way that the market repriced Fed tightening seemed kind of odd and incongruent with reality. And so I wouldn't put much stock in the market moves that are happening now, because people just have no idea what's going on, right?
And I just want to kind of wrap it with this, what's happening in the 10-year. This was the move from all the way back, the COVID low.
Yeah.
And, up here, everyone was finally getting hip to yields rising. And this looks pretty heavy to me. We start taking out 170 on the yields here. Why can't we see 140, 150? I know people that are talking about 1% again. So how does that happen in a Fed hiking cycle, that the 10-year yield has already peaked? The market's already done what the Fed's going to do. Am I reading it correctly? It's strange because I have kind of a toppy chart here, and the Fed hasn't even begun. All they've done is jawbone.
Yeah, well, it kind of screams of policy error, doesn't it? That the market already thinks that that is going to be tightening into a slowdown, essentially.
Right.
And that's what it shows me as someone who started as a cub reporter on the bond market desk at Reuters in 2001. That was my first job. So,
well, I know a lot of smart people like Danny Blanchflower, from 4 months ago was talking.
Correct.
About, and he's a labor economist.
That's right. He's focused on the expectations measures of the consumer surveys, and I'm paying a lot of attention. They're still going down, so he's been right so far.
And we have this young guy who's pretty eloquent, and he's saying real income's falling at such a fast rate right now, and he's been showing economic weakness, and most of it's a demographic argument. But there's a lot of people saying, I think Lakshman, I'm going to have him on. There are a lot of people saying that we're already slowing down here. And is that what the 10 and 2 inversion? We're not inverted yet, but we're flat, right?
Yeah, exactly. No, it does feel that way. But again, and you could argue, I guess jobs is a lagging indicator. So maybe today's number is just kind of a leftover of the boom.
And people, paying record prices for gas can't help. Do you really believe that the consumer is in good shape?
I think the numbers mask the disparities, right? I think the whole 2.5 trillion in savings is so top heavy, and because it's heavy, it's directed at people who don't have a greater propensity to spend it, and so I don't think it's particularly, that stock of savings is particularly stimulative. Let's put it that way.
Okay, so mainly the older people saving, paying off debt, but if all these people haven't gone back to work and there's no government support, what are they doing? They day trading the markets?
I actually don't know, and I don't believe that this decline in labor force participation and the employment to population ratio are actually permanent. I do believe that are eventually going to come back. There's still some lingering kind of, I think basically the pandemic broke the existing labor market structures to the point that reentry means a change of job or something completely new. But I do think people don't have sort of infinitely deep pockets just because the market a little bit, and that they're just going to lounge for the rest of their lives. Like,
Yeah.
People have fairly like
How-
long life expectancy. They don't retire at 55, you know, like
Yeah.
it just
Yeah.
doesn't.
They're going to have to pay rent.
Yeah.
Like
So
us, hardworking stiff veterans, you know, that have been out there. So getting up at 4 a.m. and so
yeah,
forth to be on
I'm
top
with
of
you.
things.
I'm with you.
Yeah.
People need to work. I don't, this whole, it's a very kind of elitist notion that like people are retiring because they just have enough and they didn't like their boss. Like it doesn't work that way. Like,
Who likes their boss?
well,
I
actually,
do.
my boss is
Blake,
right now,
I
to
like.
be honest. I do too. But it's a
Okay.
rarity. It's a rarity.
Yeah. So I tell you what, Pedro, I'd love to keep you in the rotation and bring you back. And I'm so glad I reached out, and it was great hearing your voice. And thank you for edifying the F.A.C.E community today. And
It's my pleasure. Yeah.
And so you can,
anytime.
and you can follow Pedro. In fact, you have to follow Pedro on Twitter at P da Costa. And then you could go and check out his columns and what he's saying about the Fed. And that's going to be pretty important this month. And I want to thank you again, Pedro, for your time today. I know normally you probably would have been pounding out something on the NFP. So thank you for making our fixed time today.
My pleasure, Dale. Thank you so much for having me.
All right, buddy. Really great to talk to you again.
You too. All the best.
All right, everyone. Pedro da Costa, follow him. And I'll see everyone on Monday, hopefully. And I believe you could join the team in 20 minutes for the Morning Edge. Thank you, everyone, for your attention. We hope we added value with our guests and our commentary. Our mission is to build up and edify traders every day. And don't just count your pips, count your blessings. And we'll see you all next week. Adios. They loved you, Pedro.
Thank you, guys. That was really
all right.
That was really fun. My pleasure.
All right, buddy. Adios.
Thank you. Talk to you soon.
All right, Pedro.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.